Hello, everybody. Welcome to the show today. Today, we're going to talk about how to get money for your business in 2020. By the end of this, you are going to know how to set up your business where you are fundable, where you are appealing to lenders. We're going to talk about the exact steps for you to build business credit for your EIN that's not linked to your personal social security number to eliminate your personal liability. We're also going to talk about over 30 different ways to get credit lines and loans for your business, many of which most people don't even know about. So a lot to cover. Let's dive in. So we're going to be discussing specifically how lenders and credit issuers today have a secret fundability approval process that you probably don't know about. And we're going to talk about how you can decode this and beat the banks to actually get approved for more money at better terms. We're also going to talk about the exact steps to build business credit. This is credit that's linked to your EIN, not your personal social security number. This is credit that does not require personal credit checks for approval, and it does not require personal guarantees. So I'm going to show you exactly how to do that. And we're also going to talk about how to get the most capital for your business as well. Okay, this is actually coming from a lot of different funding sources. A lot of people don't know where to get money or the type of money to look for. We're going to decode all this so you can get the most money for your business, again, at the best terms. So if you're staying to the end of this training, then you're going to receive a free fundability check where we're going to take a look to see how fundable your business is now in the eyes of lenders, the perception that lenders have about your current business. We're going to help you check your business credit reports with the credit bureaus at absolutely no cost. You're going to be able to get 30 days of business credit monitoring with Experian and Dun & Bradstreet. I'm going to show you how to do that. And we're also going to talk about how you will know within minutes all the loans and credit lines you can qualify for now with over 1,000 different funding sources. So for those that don't know me, my name is Ty Crandall. I'm actually the CEO here at CreditSuite. Won't talk about myself a lot. You will see our phone number on the bottom of the slides. If you have any questions, feel free to reach out to us or give us a call. You'll also see this link to schedule a consultation, which is absolutely free, where we'll be able to do all of those things that I just mentioned in the prior slide. So let's talk a little bit about the best way to get the most amount of money for your business in 2020. It really comes down to three things. One, you've got to improve fundability. You've got to know that lenders and credit issuers have this criteria you must meet to get approved. You know this. You probably applied for a credit card, received an automated approval, or that dreaded message that you'll hear by mail in 7 to 10 days that usually does not end up well. So it really comes down to improving your fundability, okay? And that's what we're going to talk about today, is what these lenders and credit issuers computers are looking for and how to set your business up for success to be able to get approved even when you think you can't actually get approved. We're going to talk about the steps to build business credit. This is very important. If you want to get the most money for your business at the best terms, if you want to start getting money for your business that you're not personally liable for, that you're not attaching personal guarantees to, it all comes down to one thing: building a corporate credit profile for your business. And so we are going to talk about the exact steps to do that. And then we're going to talk about how to get all loans and credit lines in one place. That's the biggest problem business owners face with getting capital, is you're going to one source that offers one kind of program, and if you don't qualify, you may think you don't qualify. But it really comes down to going and accessing all legitimate funding in one location and by over 1,000 lenders. And when you could do that, that's when you actually have the chance of getting approved, when you typically wouldn't get approved elsewhere. And it's also when you have the chance of getting approved for the absolute most amount of money. So let's talk about the first step, fundability. So when we talk about fundability, it really has to do with your ability to get approved for money to begin with, whether it be credit cards, credit lines, or loans. Okay, it's all about understanding and beating the algorithms that these computers have for lenders and credit issuers. Like I said, you've applied for a credit card before and received an immediate approval, probably loans as well. And this all comes because these algorithms are looking for a lot of things, and a lot of business owners think it's things like your revenue or your credit scores, and that's not the case. As you're about to learn, there's a lot of very little things that you can actually set up correctly and have a very good chance of getting approved, even if your revenue and credit aren't as good as you'd like them to be. There's actually over 125 of these fundability factors we found. Here is our matrix that we actually use to be able to set our customers up for success. Okay, just to give you a look at how many of these fundability factors there are. There's over 125, and that number continues to grow. If I zoom in on our graphic, you'll just see some of these things, from things like your LexisNexis and ChexSystems credit reports that you might not even know exist, and we're going to dive into those today, all the way to your DBA, to having your corporation in good standing, to the age of late payments, and so many other factors. All really come down to your fundability, and we're going to be talking about exactly what that is. And somebody's asking, is this live? Yes, we are absolutely live right now on YouTube on January 21st at about 1:05. So let's jump in and talk a little bit more about these fundability factors. First of all, the most important thing you need to know is that over half of loan applications are not denied because your revenue's not strong enough or your credit's not strong enough or all these things that you think are relating to the denials. It's actually denied because the lender thinks it's fraud, okay? And this has to come down with congruency. So let me explain to you how it works. There is rampant fraud in the banking industry. And so what happens is a lot of these computers that lenders and credit issuers use are mainly designed to make sure that they red flag or deny the application if they believe it's fraud. How do they think it's fraud? It comes down to congruency. Is the information you're putting on the application congruent with other sources they're getting the information from? Okay, so let me give you an example. I have a logo right here for the SBFE, the Small Business Financial Exchange. What the SBFE is an organization, a third-party data aggregator that is actually owned by lenders, places like Bank of America and places like Chase and Regions Bank and Wells Fargo. They are the members that own this. And what happens is they openly share information with each other. So if you go to apply for a business credit card or a business loan with Wells Fargo, then you go over and apply for a business loan or credit card with Bank of America. What you might not know is Bank of America's computers are accessing all the application data that you filled out with Wells Fargo. Even more than that, they're accessing all of your loan performance data, everything else that the other bank has about you. So if you go and your revenue is a little bit different on the application in Wells Fargo than when you apply for Bank of America, that's what actually gets the application denied. It's this incongruency that these computers pick up. Okay, so that's very important that you make sure that the congruency of all of your information, name, address, phone number, everything online and offline is the same. It's also very important that you make sure that what you're putting on applications is congruent and know that these lenders are all tapping into that same database. Let's talk about your credit report. Somebody mentioned here that they're looking to actually improve their consumer credit. And somebody says, Rita asks, do you do services in Canada? Yes, we can help you in Canada as long as you own a U.S. business. So if you have any questions, our number's on the bottom and you could give us a call. Okay, consumer credit reports, commercial credit reports, LexisNexis, 3 ones that you really need to know. I'm going to decode all of these today so you have the best chance of getting approved for financing. First, let's talk a little bit about your consumer credit scores. Here's a breakdown of exactly how the consumer FICO score works. Here's why this is important. 30%, nearly a third of your consumer credit score is made up of what is called utilization. What percentage of your high credit limits are you actually using? The biggest mistake, number one, that I see business owners make, they start a business, they use personal credit cards to fund it. They usually think it's going to happen a lot faster to get the business off the ground and cost a lot less money than it typically does. What they do is they put the money on consumer credit cards. They quickly max out those consumer credit cards. That significantly lowers their scores and lowers and ruins their ability to get financing. Many options we're going to talk about today, which you could get if you just would have looked at these in the beginning without using your personal credit to fund your business. So you should always work with a professional company if you have derogatories. We don't work with consumer credit, but there's plenty of them out there that can help you with improvements here. You just need to know, do not get credit cards for your business that report on your consumer credit reports, like Capital One. That means when you use the money to fund the business, you're damaging your personal credit. You need to avoid those. You also need to avoid using consumer credit cards to be able to fund your business. And we'll talk about many other ways you can succeed instead. You should know that business credit reports are mainly offered from Dun & Bradstreet, Experian, and Equifax. If you pull these credit reports, you will find about 5 credit scores on each of these reports. You also need to know these are publicly accessible to anybody that wants them. Your prospects, your clients, okay, potential buyers of your companies, when it comes to suppliers. Okay, so I just had somebody contact me the other day. I said, I'm going to buy this company. Will you pull their commercial credit report for me? This is very, very, very common. So you need to know that all of these things exist on your business credit reports. We will talk about this a little bit later when I map out the exact steps for you to build business credit without that personal liability. Okay, you also, just some tips on building business credit. You need to manage that debt responsibly due to days beyond terms. Business credit, different than consumer credit. In business credit world, even if you're 1 day late, it starts hurting your credit scores. In the consumer world, you could go 30 days late before it impacts your credit score. So very different. You don't want to use personal credit to fund your business. We just talked about this. You also need to build business credit. You need to be consciously aware of what you're doing. Over 97% of trade vendors that will give you credit do not report that credit. So I talk to many business owners that get denied for very big loans because they never never built their business credit, and they thought they were building their business credit because the vendors they were using extend credit to them. They just don't report that credit. And you even have options like submitting your financials to Dun & Bradstreet that actually give you better scores in some cases. So a lot of things you can do to actually improve those commercial credit scores. We'll talk about that a little bit later when we talk about building business credit. Let's talk about LexisNexis. Have you pulled your LexisNexis credit report? It's very important. This is the root of where almost all the information comes from that lenders, credit issuers, suppliers are actually accessing. As a matter of fact, the public records on your consumer credit reports, TransUnion, Equifax, Experian, those are verified with LexisNexis. So if you've ever had a judgment, a bankruptcy, a foreclosure, you've tried to get removed from your consumer credit reports and have failed, it's because you're disputing it at the wrong place. If you went to LexisNexis and disputed it, had it removed, then went to the credit bureau and disputed it, they would verify with LexisNexis, see it removed, and you'd have a significantly better chance of getting that account deleted because LexisNexis is where all the stuff is coming from. Here's a quick look at some of the stuff that's on your LexisNexis credit report. Every home you've ever owned, the value of the home, the sales prices, the actual building materials for your home, the HOA, the homeowners association information, how many bedrooms, bathrooms, roofing, air conditioning units on every home you've ever owned, the deeds and mortgages, the title companies you use to close, the interest rates, the loan amounts, the terms, the loan types, every phone number and email you've ever had. Okay, I've actually seen cases where people are denied for merchant accounts, bank accounts, etc. And the reason that they're denied is because they're associated with old businesses that were discovered because they had phone numbers and emails linked to those businesses on their LexisNexis credit reports. All licenses, firearms, boating, mortgage, pilot, and any violations on those licenses. So if you've ever had a license and had it revoked, that's on your LexisNexis credit report. Every traffic ticket, felony, misdemeanor, sex offender records is all on your LexisNexis credit report. Okay, I for one have applied for an SBA loan and found out that in my youth I actually had 2 misdemeanors. I didn't even realize, I didn't even think about that were traffic related. Okay, and what happened was I went to apply for an SBA loan. These pulled up on my LexisNexis credit report and almost cost me the loan. So these are things that are very important because this is the difference between getting approved or not. Any aliases, name verification, marriage and divorce records, every vehicle owned including VIN number, every insurance policy you've ever had, every business you've been associated with, family information including children, every loan and lease that you've had is on there, aircraft, boat owner records, public records, bankruptcies, judgments, lawsuits, liens, educational information including degrees in schools, dates attended and graduated, military records, online marketing records from sources you've registered to receive correspondence from, short-term credit offers, and on and on. I ran out of room on the slide, or I would tell you even more. So this is the kind of stuff that's on LexisNexis. Let me give you an example of why this is a problem. We went to apply for an SBA loan. One of the stipulations was they wanted to use my personal home as collateral, which made no sense. The reason was because they discovered 2 judgments on my credit report with LexisNexis. Here's the problem. Those were not real. They were not legitimate. I had to go to the courthouse and jump through all these hoops to prove to the lender they weren't legitimate, for the lender to remove that stipulation. It almost cost me the loan. For a $325,000 business loan was almost cost and jeopardized because the information on my LexisNexis credit report was not real. Okay, so then I had to go through, dispute it with LexisNexis, get it fixed, and now I won't have that problem again. So these type of things are the difference between getting approved or getting denied and getting the terms you want to get. Okay, now there's a lot of other things as well. How you structure your business name. Does your name reflect that you are in an actual high-risk industry, for example? Okay, beyond that, the entity type that you've set up matters. The EIN that you have matters. The business NAICS code or the SIC code for the business all matter as well. Did you know that you are the one that chooses the SIC code for your business? Okay, unless you don't. If you don't choose the SIC code, if you don't choose the NAICS code yourself, then it is chosen for you. And it is chosen to automatically put you into a high-risk business that makes it more difficult to get financing. Let me give you an example. At CreditSuite, we sell software that helps business owners succeed by getting money for their business. You could look at us as being in financial services, or you could look at us being a software company. You could choose either way. So when lenders look at us, they want us to be in financial services because that puts us in a a high-risk category. It means they can charge us more interest. It means they can scrutinize our application more. It means they could deny us more. But we don't let that happen because we choose an NAICS code of software company, and then if they challenge that and say we're in financial services, we correct them. We show them our tax returns. We show them our credit reports from the business credit reporting agencies that all reflect that we are a software NAICS code, and they can't refute that because we chose it. So the NAICS code you choose determines the risk. The address type you have set up, whether it be a home address, whether it be a business address, whether it be a virtual address, a PO box, a UPS, these things matter. Nowadays, Dun & Bradstreet is putting Google Street Views of your business address on your credit report for your business. If you don't want a picture of your house on your business credit report as your business location, you have to consider not using a home address and using a virtual address instead, for example. Other address types like PO boxes or UPS addresses will automatically get you denied for a lot of different kinds of financing. Same thing with your phone number. Not having a fax number in some cases is a problem. Using a mobile phone or a home phone versus a business phone. Even using virtual phone numbers with places like Google for some reason create a lot of denials when it comes to credit card applications. Do you have licensing that you're required to have? Is your website set up? Is your email address a Gmail address or is it a professional email address? My email address is info@creditsuite.com. That's the right way to do it. It's congruent with my domain. If you're using a Gmail or an AOL type email address, that alone can get you denied. A lot of factors here where it comes down to fundability. Like I said, we just touched on some of the over 125 that are there. So in this world, how can we help you? Well, we do a congruency validation at absolutely no cost. If you're scheduling a consultation with us at creditsuite.com/consult or giving us a ring at 877-600-2487, we check some of these congruency to see how you are rated, how your fundability is positioned now. We also understand and repair business reports with D&B, Equifax, Experian, LexisNexis, Check Systems, even your small business FICO score as well. So if you're interested in having these be as good as they can be so you're as lendable as you'd like to be, this is the area that we specialize in to help you get even more financing for your business. We also can help you build business credit from scratch. And I don't have a lot of time today, but we also help with over 79 more fundability and business credit tips to get this fundability in line, because when your fundability is strong, that is the driving factor for you to be able to get approved for credit and financing. Like I said, it's not your revenue, it's not your credit score, it's fundability. That's where more than half of loan applications are denied. And these are all the types of things that we're helping you do when you're working with CreditSuite to make sure that your fundability is set up to be able to get the most money for your business. How do you build business credit? Let's talk about this. What's the exact steps to be able to get credit for your EIN that's not linked to your personal social, without the personal liability, without the personal guarantee? Well, this is, again, EIN credit. This is credit for your business. It's based on your business's ability to pay your bills. It's not linked to your social. It doesn't require a personal credit check for approval. The credit doesn't report on your consumer credit reports. You're not personally liable for the credit I'm going to show you how to build right now. There's no personal liability. There's no credit check because it's credit for your business. It's not linked to you individually. This credit reports to the business credit reporting agencies. Look, you're not going to get a personal home loan. You're not going to get a personal car loan, a personal credit card without your consumer credit being looked at. It's the same way in the business world. You're not going to get a business credit line. You're not going to get a business credit card. You're not going to get a business loan without your business credit reports being looked at. And even if you get approved for a credit card, the chances are that you got a limit way smaller than it could have been if you just would have actually built your business credit, known what lenders and credit issuers are looking for, and built the credit profile they want to see. These credit profiles even say the amount of money that the reporting agencies recommend you be lent, the amount of credit that they recommend that you be issued. So these are very highly looked at items on these credit reports, and if you want to get the most money at the best terms, it really comes down to building that commercial credit report. You can get high limit accounts very quickly with business credit. What do I mean? I mean $10,000 to $1,000, $20,000, $30,000 limit credit cards in your business name without a guarantee, without a credit check, in about 60 to 90 day time frame if you're doing this the right way. Okay, and it also also helps you establish your fundability. It's one of the things that is looked at to help you get the most money for your business at the best terms. Now, one of the things you should know about business credit is that you will be issued a failing business credit score even when you have no credit. Here's how it works. Okay, Experian and Equifax get information from places like your Secretary of State. When you file an annual report, it's January, so a lot of people are filing annual reports right now. They get information from that annual report. When they know that your business exists, including the SIC or the industry code that you have, and the name and address of your business, which they get from the Secretary of State, then what happens is they automatically issue you a failing credit score. Okay, so that being said, you've got to make sure you're consciously building business credit, or you're automatically out the gate behind the 8 ball because you're given a failing business credit score. And some people are saying, is this going to be saved? Yes, this will be saved on YouTube. And somebody else says, hey, how easy is it to remove items from LexisNexis? In my experience, it is very easy if you understand the process to get items removed from LexisNexis, because they're not used to handling credit disputes like they see with the main reporting agencies. And again, if you have questions on that, you'll see our number on the bottom of the slides. Give us a call. We'll definitely talk to you about ways to improve all of your credit profiles, including LexisNexis. Okay, your business credit also will determine if you're going to get approved for credit cards, credit lines, and loans, if you're going to get denied, how much you may get approved for, and the rates and terms you'll pay. And again, as I mentioned, it's public information. Anybody that wants these commercial credit reports can get it. They don't need your permission to look at your business credit reports. So let's talk about building your business credit. How do you do it? The first thing you do is establish that fundability. I gave you, 10, 15 of 125 fundability factors. You've got to make sure that that fundability is built. If you're not sure how fundable your business is, give us a ring. Again, our number's right here on the bottom of these slides, and we will do a free fundability assessment. We will even look at your Secretary of State records. We will look online for your congruency. We'll go and use the same system that lenders and credit issuers are using to make sure that you are set up where you're fundable. Okay, you also need to come in and get set up with the credit reporting agencies right now. You need to see if you're set up. We do this for you at no cost. We will actually do a check with the credit reporting agencies to see if you're set up with them now. Do you have a credit report with Dun & Bradstreet, Equifax, Experian? Do you have trade lines reporting? Do they know your business exists and yet they're giving you a failing score even when you have no credit? Those are the kinds of things at absolutely no cost we can help you with by scheduling a consult at creditsuite.com/consult. You can get and review your D&B, Experian, and Equifax commercial credit reports as well. This is a good idea for you to be able to do. You need to actually look and see what's on those credit reports, what they know about you now. And again, if you're getting with us at creditsuite.com/consult, we'll help you even get 30 days of credit monitoring at no cost, so you can even look at your real commercial credit reports to see what's reporting. And you also need to set up that DUNS number with Dun & Bradstreet. They can charge you upwards of $1,400. That's completely free when you're working with CreditSuite. We don't charge you anything to help you get your DUNS and activate your credit profiles with Dun & Bradstreet. But you need to know, if you're working with them, they're going to charge about $150, or actually it's $200. No, it's $150 to $200 a month. You got a choice. Or they're going to charge you about $1,400 just to get this set up and to activate your credit profile. So again, if you want to talk more about that process, feel free to give us a call or schedule a consult. We'll talk through how you can get that at absolutely no cost whatsoever. Okay. And again, Sharita says, I need to separate my EIN and SSN. Yes, you need to separate those credit profiles and the liability. If you don't, the problem is you'll always be personally liable for what happens in your business. So most credit you get does not report to the credit reporting agencies. Again, over 97% of credit that you get doesn't report to the business credit reporting agencies. So you've got to get credit that does. As a matter of fact, to make this worse, okay, a lot of the credit you get reports to the consumer credit reporting agencies. You may go get a Home Depot credit card, an Amazon credit card, a Best Buy credit card for your business, and they show on your personal credit report. You need to avoid that for many reasons we've already discussed. But again, you've got to make sure that you get credit that does report. There's two ways to establish credit initially. One is called UBF, Unsecured Business Financing. This is where you can get up to $150,000 in credit lines, even as a startup, even in a high-risk industry, even as a nonprofit, and you can get it with 0% interest rates. It's no doc, there's no tax returns, there's no financials required, and you just need to have good consumer credit. You need to have about a 680 credit score or higher. Even as low as a 650 credit score, you could still start to get some of these credit lines. But with 680 credit scores or higher, 700 type credit, that's what will get you approved for these unsecured credit lines to start your business or grow the business that help you build business credit as well. The other option is to get credit with vendors that do report that credit to the business credit reporting agencies. Okay, so some of these vendors, for example, are Uline and Quill, that actually will give you credit that report that credit to the reporting agencies. So you have a couple different ways that you can actually build business credit. You could use your good personal credit to qualify, as I explained, get credit lines that report to the business credit reporting agencies. Then you can get up to 150,000 in credit lines and build your initial business credit. The other way doesn't require a personal credit check or guarantee. It's using vendors. Places like Strategic Network Solutions, places like Granger, places like Uline and Quill, they will give you credit. So you go into those places, you add items to your cart, you go to checkout, you choose to be invoiced, and they will give you credit initially, and then you pay that bill and they report that credit to the business credit reporting agencies. The second option with vendor credit does not require a personal guarantee or credit check to get approved. Now, the other thing you'd want to do after that is start getting store credit. With about 5 of those vendor accounts reporting on your business credit reports, you can then move on to what we call the retail credit tier. The retail credit tier is where you can actually get credit for your business through major retailers. Places like Amazon, places like Best Buy, places like Costco, Sam's Club, Home Depot, Lowe's, almost every major retailer offers this kind of credit. We oftentimes see people approved for $10,000 to $30,000 revolving credit lines at places like Amazon when they're 2 to 3 months into the process. It just takes a handful of vendor accounts to be able to do this. Don't authorize a personal guarantee or credit check. My trainings before 2020, always used to talk about not putting your social security number on the application at all. But in the middle of 2018, they made a change where the government now requires banks to get your social for identity verification purposes. So it's very common if you're getting a credit card that's issued by a bank for them to force you to give the social to verify your identity. But you need to be careful. Don't authorize a personal guarantee. Don't authorize a personal credit check. If you do, they will pull your personal credit and they will make the decision based on personal credit quality. If you don't let them do that, they're going to pull your business credit report. They're going to see that 5 vendor accounts I told you how to get. They're going to see a good score as long as you paid the bills on time. And then they're going to make the decision based on your business credit quality, not requiring you to sign as a personal guarantor. Look, I can't explain this enough. So many people think that they deserve to get credit without a guarantee just because they've established their business. That's not how the system works. How the system works is this: the only way it's possible to get away from guarantees in your business is because your business can stand on its own, because it's built its own credit profile and score. I don't care if you do $100 million a year in revenue. If you haven't built your business credit, you cannot get credit without the liability. You have to be able to build a credit profile. That's what gets you away from the liability. That is what is essential. And GM says, is home buyers a bad name? Well, home buyers isn't a bad name, but anything in real estate is considered to be high risk. Somebody says, should NAICS code be listed as business management or not real estate? Yes, a general category like that can definitely help you. Ruben says, I'm a new business. Should I worry? My personal credit is not connected. You need to follow the steps I'm teaching you and you'll be fine. But if you go anywhere off of these steps, that's when you're going to run into problem. Okay, and Shinek says, how long will it take to Quill to appear on my credit report? They typically take up to 90 days. If you want to expedite business credit building, you need to work with vendors that report that credit monthly, not quarterly. That's what it comes down to. And Thomas says, I don't have money to pay back Quill. That's a problem. Never get credit that you can't pay back, because your credit scores are based solely on how you pay your bills. So you need to make sure that you only get credit that you can pay back, because that's what really comes down to how your business credit report or business credit scores are established, based on how you pay your bills. Now, once you get about 8 to 10 total accounts, now we're getting credit with major retailers, then you can move on on to fleet credit. Fleet credit is used for like a fleet of vehicles. That's very important if you're in the trucking business, for example. This is where you get gas cards. This is when you get Sunoco and Chevron and BP credit cards. This is where you can get money for fuel, and this is where you can get credit for auto repairs and maintenance. That's the next step in the process, and the final step in the process is about 14 accounts reporting on your business credit reports, and one of those accounts has a $10,000 high. That's where you can get what we call the cash credit tier. Let me clarify. This doesn't mean you're able to go get a credit line. What it means is you're able to get a Visa card or a MasterCard, American Express, that you can use anywhere, not just a particular retail store. Now, a lot of people say, how do I get a $10,000 limit? It happens organically, naturally. As long as up until this point you've got credit you're really using to build your business credit, then what happens is that is the key to being able to get your next approvals higher and higher. Let me give you an example. Okay, if you're coming in and getting credit you're really going to use to grow the business, let's say you're a trucker, and you're really coming in and getting fleet cards and using those to fill your truck every time, $600, $1,000 every time you fuel that truck, then what happens is the next credit issuer see that you're using the credit that you previously had, they automatically get you higher limits and higher limits and higher limits. We have clients that have individual limits of over $100,000 on single credit cards because they're using the credit. So once you have 14 accounts reporting, that's the key to being able to get cash credit, okay? And Frank says, how about lending for real estate? We'll talk about that. Suggested code, NAICS, go with something related to consulting. That is your best bet. Joke City says, I'm stuck in the process. I'm in position to start getting vendor accounts. I need to know which vendors work best. I mentioned many of them, but just give us a call, 877-600-2487, or schedule a consult. We'll have that conversation with you. Some of them I've already mentioned, including Uline, Quill, and Granger can help you as well. And Proline says, what other vendor accounts are good to start with? I mentioned about 5, but I've got all kinds of additional training on YouTube that can help you. And you can also come in here and schedule a consult. We'll talk to you a little bit more too. One more question and we'll move on. I built my business credit up to 84 paychecks. Congratulations. Yet no one will give me revolving credit. What do? You get more accounts. What I've shown you is a very important formula. Notice, my formula doesn't show you time in business. It doesn't show you revenue. Because if you build enough trade lines, accounts that report on your business credit reports, that is what will get you approved for more credit. It's not a matter of time in business. It's not a matter of revenue. Yes, those things help you, but if you followed the steps that I've outlined, it's the number of accounts you have reporting that will get you even more credit. At this point, you can get auto financing as well. You just got to make sure that you keep using the credit, keep applying for more, keep paying those bills timely, because that's what your scores are based on. And you want to make sure that any loan you get for your vehicle, any loan you get for the business, ask the lender, do you report this to the business credit reporting agencies? Do you pay my time? Do you report my timely payments? A lot of lenders will file a UCC filing showing that you have a loan with them, that you have a debt, but you don't get credit for the payment. So try to work with lenders and auto finance or financing of auto vehicles that report to the business credit reporting agency. You need to consciously be aware of this to continue to build that business credit. It becomes very important, and you need to keep track of the credit sources. Business credit reports are really weird like this. They don't show the name of the credit issuer. If you have a Home Depot account, or an Office Depot account, and you pull your credit report, it's not going to say Office Depot. It's going to say the category. It's going to say office supplies. So if you're not keeping track of the credit you have, you're going to pull that business credit report with 14 accounts and have no idea which account is which credit card. So keep track of this credit as you get it, see how it reports, know how it's reporting, and know the source that it is, so you can keep track of how you're paying your bills and know which source you actually have, okay? And Sharita says, do I need to take my name off my business? Okay, you should consider it for just liability reasons. So she's actually saying, Sharita Lawson Trucking, make S&L Trucking. Yes, that's a very good call. That makes sense. Lease or finance. Leasing is typically cheaper, but the most important thing is to make sure that that credit reports. And Big Sis Media says, is Google Voice still a legit phone line? It is, but I got to tell you something really weird. They don't like these Google Voice phone numbers when it comes to applying for revolving credit. So if I were you, I would consider possibly changing that to something else. How we can help? Well, here it is. This is our business credit building matrix. This is what we look at, all the factors that come down to building business credit. Okay, there is over 180 of them. Here's a look at just some of these type of things that we focus on when we build business credit for our clients. The time that derogatory accounts are reporting, the time that how vendors are under in the bank underwriting, okay, how you're paying upon your statement or when you're paying or paying upon invoice, the best to apply by phone or best to apply by fax, etc. Okay, so look, I don't want to convince you this process is easy. The simplest way to explain it is this. If you're doing it on your own, it could take you 2 to 3 years to see the same results that our clients are seeing in 6 to 9 months. How's that possible? Because of this. Because there's over 180 factors that tie in to your success with getting approved. And you've already heard some comments here where people say, I've done this, but I'm still not able to get approved. It's because there's so many different reasons you could be denied that you've got to make sure you have in check. So how we can help you with this? Well, again, we're helping you with that fundability. We're helping you get set up with the credit reporting agencies and activating your credit profile. So we're getting your DUNS number for Dun & Bradstreet, your business identification number, a BIN number with Experian, okay? And you don't have to pay the $1,400 to activate that. We're doing all that for you. We're getting unsecured business financing to get initial credit lines for your business using you or a guarantor. We're helping you monitor business credit building for only $24 a month versus paying $2,200 a year. So that saves you over $2,000 a year where you're not paying for those reports. And then we have the greatest supply of vendor, fleet, and retail credit all in our actual finance suite. We tell you the underwriting guidelines. We tell you the order of credit to apply with. We give you the secret approval links that you need to get approved. We tell you how often they report. That was one of the questions here. We teach you the credit to apply for that you can get approved and it reports faster. That's how we take a 3-year process and condense it down to 6 months, just tearing it out and showing you exactly what to do in which steps. So again, you can take my free training and you can do this, but you're going to find that it's a lot of trial and error. You go and apply, you get denied, you apply and get denied, you apply and get approved. You have no idea why you got denied. Then you apply for something else, denied, then approved. So it's just a slow process that could take years and many give up. But keep in mind, we can also help you through this process and help condense that time frame and help you save money by not having to pay for some of these other things as well. Somebody says, can you transfer your Google number to a normal line? Don't know that. You have to check with Google on that. Somebody else says, what if you use a registered agent where your business is incorporated to maintain privacy? You absolutely can do that as well. Many people do. And again, as I mentioned, we're also going through the underwriting guidelines, the secret links, and you're working with our advisors that hold your hand and walk you through the entire process to help you condense about 3 years worth of business credit building down into about 90 days, or excuse me, about 6 to 9 months total to get to the very end of this process, and you're getting credit about 30 days in. So we've talked about building your fundability. We talked about getting into the lender's head and knowing what it takes to get approved, and then basically setting up your business where it's fundable so their computers will automatically approve you. Then we've talked about building your business credit to help you get high limit revolving accounts. These are so important because you don't need cash flow to get them. You don't need credit to get them. You don't need collateral. Even a startup, even a high risk industry is still able to get all that kind of credit that we talked about. But how about the good stuff? How about the loans? How about the credit lines? How about the actual access to capital? Well, that's what I call my capital acquisition formula. Here's exactly how it works. There's 3 things lenders look at to approve you for money: cash flow, credit, and collateral. You need only one to get approved, and the more of these you have, the more money you're able to get approved for. It's that simple. So if you try to go into your bank, for example, Chase, to get a loan, the problem is they're going to require you have good credit, they're going to require you have collateral, and you have cash flow verified by tax returns. Let's say you go to an online lender that offers cash advances. The money's very expensive, but all they're going to look at is just your cash flow to get approved. We talked about unsecured business financing that you could get as a startup. That only looks at credit to get approved. All you need is one strength to get approved. And if you have no strength, I'm still going to talk about other options that will work for you, including business credit, as we just talked about, which is still another great way to get money for your business. So here you go. A lot of different ways to get money for your business, and this is also the problem. The reality is there's more access to capital than there's ever been before for us entrepreneurs. The bad news is that when you find a lender online, they typically only offer one of these. One. So if you don't have exactly what it takes to qualify for that one, you get denied. And you walk away and you think, I just can't get the money that I need. That's not the case at all. You just applied with the wrong program and the wrong lending source. So you've got to find the right source and you got to find the right program. So some of these programs include revenue lending that looks at your revenue, merchant cash advances that looks at your credit card payments, account receivable financing, which it works great if you have account receivables, or purchase order financing, or UBF, unsecured business financing we talked about. Book of business financing. You can use stocks, bonds, 401ks, IRAs from yourself or somebody else that pledges those as collateral to get financing. You could borrow against or get money to get vehicles or real estate. Peer-to-peer lending is new. It's like playing in the stock market and investing in public companies, but people are now investing in private companies like your and I's. It's one of the newest kind of lending and much easier than getting approved for conventional banks. You've got angel investors, affiliated and unaffiliated, that will help get you the money to get the business off the ground. Venture capital, private investments, equity investments. You can get money to buy equipment or inventory, or lease it, or borrow against inventory or equipment you already have. Okay, you can get SBA loans and term loans and business lines of credit. You can get the money you need, 100% of the money you need to invest in real estate, buy the house, and actually fix up the house. You can even get crowdfunding or PayPal and Square loans. And as you can see, I just ran out of space on my slide. There's so many other kind of financing out there. We didn't even talk about grants. We didn't even talk about a lot of the other money that's available as well. So here's the problem: is there's so many different ways you can get financing for your business that if you don't know the right source, if you don't know the right program, and you apply it the wrong one, you're putting inquiries on your credit, which can cost you the financing you're trying to get, and you're not able to get as much financing as you actually need. Let me give you an example. We had a client that was a doctor, needed $417,000 to pay off a tax lien. 580 credit score. Of course, he got denied at his bank. Came to us to close down his business. He wasn't even trying to get money. Okay, he knew there was no way he could get money, or so he thought. Okay, a year later, we got him over $1.5 million in financing. How's that possible? Because we combined 8 of these different funding programs. We got him money from a lot of different sources using a lot of different funding programs, and where he was struggling to get $400,000, we got him over $1.5 million. He ran for public office. He even opened up another practice. He was an OB doctor and opened up a second practice. That's the power of having access to all different capital sources in one place. It's so important for you to be able to do that. Okay, Eric says, if denied, how long do you wait to reapply? You shouldn't reapply anywhere if you don't know why you got denied. But here's the question: do any of you ever know why you get denied? Have you ever been denied for a credit card for your business or a credit line or loan and the lender told you? Very rarely do they tell you. So the question is, you should never go back to that source and reapply unless you fix the underlying issues that you had. Meaning, if you got denied, it's probably because you didn't meet one of these 125 fundability factors we talked about. Get your fundability in line, then go back and apply. We have a client, let me give you an example. We have a client got denied for a $100,000 loan. Okay, came in, we did a fundability check, we found one discrepancy with her Secretary of State, we fixed the one discrepancy, she turned around 1 week later and applied for the same loan and got approved. That's the power of fundability. That's one thing that we fixed. And this is what we find with many business owners. Over 90% of business owners, we see their Secretary of State data isn't even accurate. Okay, so this is where people get denied. It's these little details that you will oftentimes overlook. And Desmond says, I got a Google Voice number. It works. Just log in on your laptop. Yes, it does. Okay, but the problem is for some reason, those phone numbers are categorized a certain way with a lot of credit issuers, where we have just seen a lot of our clients get denied. Okay, and Nika, one of the one, says, what's the best way to build business credit for real estate investment? I already showed you. If you missed that part, go back. I just gave you the exact steps to be able to build business credit. That will work for you if you're a trucker. It will also work for you being in real estate as well. So let's talk about cash flow financing. Okay, these are all the kind of financing you can get that's just based on you having consistent cash flow. Okay, that's one of those C's: revenue financing, merchant cash advances, term loans. This is the kind of money you can get just based on having good, consistent cash flow in your business. So if you have bank statements, if you have tax returns, one or the other, that show consistent money coming in and out of your business and you're managing those things responsibly, then that's the key to getting cash flow financing. We already talked about credit-based financing, unsecured business financing. This is where you can get up to $150,000 in 0% interest credit lines using your credit or that of a guarantor. Your guarantor might be mom mom, dad, grandpa, grandma, a potential investor. Keep in mind, over 75% of business owners get money from family and friends. This kind of financing lets you leverage their credit to get the financing you need instead of them actually giving you cash. And since the credit reports to the business credit reporting agencies, it's a great way to build your business credit and kind of help make it easier on them, because that credit doesn't even report on the consumer credit reports, or you can use your own personal credit to qualify. What if you have collateral? We talked about some of these options as well, whether it be equipment or purchase orders or account receivables or commercial vehicles, okay, or inventory, or you want to flip homes or use stocks, bonds, securities, 401ks, IRAs. Any of these things can be used as collateral to get financing as well. Just remember, cash flow, credit, collateral, that's the capital acquisition formula. You need one of those C's. The more C's you get, the better chance of getting more financing. Crowdfunding, angel investing, venture capital, private investment, grants, business credit. These are all alternative ways to get financing if you don't have those 3 C's. So I just gave you another 6 ways to get money for your business, even if you have no cash flow, no credit, no collateral. All 6 of these options can still work for you to get money from crowdfunding, angel investing, venture capital, private investment, grants, even business credit as well. How we can help you? Well, here's our funding matrix. Okay, this is everything that's involved. Okay, hundreds of factors with figuring out what lender to choose, okay, and what program to go with. This is what our finance officers are actually using. These are the factors they're using to determine where a loan should go to have the best chance of getting approved. Okay, to give you just an idea, when it comes to equity financing, things like accredited or non-accredited investors, your growth potential, the business plan, okay, venture capital, angel investing are involved there, whether it's a P2P profit or non-profit, or the public records that are there, the first, second, third position of the lien. These are just some of the many factors that we're looking at. So you may get a cash flow financing in first position, and there may be lenders that'll give you a second or third loan behind the first loan you got. As a matter of fact, there's a lot of lenders that their approval criteria is that you just got a loan somewhere else. If you got a loan somewhere else, they want to give you a second loan right behind it. So these are some of the many factors that it comes down to getting approved for financing. And if you've ever been denied before, you just see why. This is exactly why you've gotten denied, because you're not going to the right place and applying for the right program. When you don't have a credible expert that can help you navigate that, then your chances of getting all of these things right and going to the right source are not good. And that's what typically gets most people denied. So how we can help you along this line? Well, again, we establish that fundability. We help you get and review your credit reports. With us, you access all legitimate financing in one place. We work with over 1,000 lenders. All those financing programs I showed you are all ones you have access to. We have a finance officer that actually works with you, develops a funding blueprint of all the money you can get now, and then maps out exactly what you need to get more money through term loans, SBA loans, etc. Okay, and that finance officer locates the best lender. They negotiate rates and terms, and we don't charge you any money to help with financing at all. As a matter of fact, lenders in a lot of cases pay us a referral fee. That's how we get paid. And since we do so much volume with them, okay, so for example, I had 3 guys from this massive lender in New York fly down and were just in our office yesterday because we fund so much money. They want to talk about how to get more of our business. And you know what we tell them? Charge our customers less. If you give our customers better rates, we'll choose you versus other lenders. So we negotiate to get you those best terms, and it costs you nothing to do a consultation. If you schedule a consult with us, we'll talk to you about all the financing that you're able to get right now. And I've got some other questions that came back in. Can you fund your business account with your payroll direct deposit? That's a possibility. Okay, Latasha, give us a call or schedule a consult. We'll talk to you a little bit more about that. Okay, what's a standard PG score qualifies you for a UBF? It's a 650 credit score usually that get consumer credit cards, credit cards that report to the consumer credit reporting agencies. If you want business credit reporting credit cards, that's when you're going to want a score of about 680 or higher to be able to get approved, okay? So that's really what that comes down to. So again, I've talked to you about getting several things, okay? How you can get the fundability check, the credit reports, the 30 days of business credit monitoring. You can get all of that at creditsuite.com/consult. On that consult, we're going to do a free fundability analysis to see how fundable your business is now. We're going to check the business credit reports with Dun & Bradstreet and Experian or Equifax to see if you're established now. Do you have trade lines or do you have a failing score? And not even know it. You're also able to get 30 days of free business credit monitoring where you don't have to pay at all to actually see your Dun & Bradstreet and Experian credit report, and we'll tell you all the funding you can qualify for now at absolutely no cost by just giving us a ring at 877-600-2487 or visiting us online at creditsuite.com/consult. Woo! That was a lot of information in a short period of time. I'm Ty Crandall with Credit Suite. If you'd like to learn more, feel free to check us out online at creditsuite.com. Give us a ring at 877-600-2487. Go and check our email at info@creditsuite.com. And you can also get a ton of free training on our website as well. If you go to creditsuite.com, top right of our page, you'll see we go live on YouTube every week. We go live on Facebook as well. We have a podcast, extremely popular podcast you can listen to on the go. And we have daily tips on places like Twitter, places like Instagram, okay, where you can get daily tips for us as well. All of our social links are on the top right of our page. But most important, did you get value? If you get value, give me some love. Give me a like. Okay, I can actually literally see the likes in real time. So if you got value from this, then please go ahead and click the like button on the video. It tells YouTube that I hit the mark on giving you this content, and then subscribe to our channel. And you'll be notified if YouTube so chooses to notify you that when we actually go live. So again, give me some love. If you got some good information out of this, please like the video and please subscribe. And I'm going to answer a few other questions and I will wrap up. So Nika says, how do you avoid providing your personal social security number when applying for business credit? We went through this earlier. My recommendation is go back through the video. The short answer is you can't. If you're applying for credit that's now backed by a major bank due to a new law in 2018 that was released in June, the government requires the bank to get your social to verify your identity. The key is to not avoid giving your social. It's to avoid giving a personal guarantee and credit check. And remember, that is meaningless to you if you've not built business credit. The only way you can tell them and have them process a credit application to get it approved is if you already have established business credit. If you have that established business credit, that's when you're going to want to avoid giving them the personal guarantee and credit. And thank you for the likes, by the way, because I just got 10 of them right now. So thank you guys very much for that. So the key is that you will have to give the social to verify your identity. The key is to not authorize the guarantee or credit check. That's what becomes important. Eric, thanks for the thumbs up. Okay, and Proline says, thank you for this information. So make sure, and then Nika says, when they pressure you to note your asset and try to convince you that it will not be tied to your personal credit. First of all, if you supply the social and you authorize a personal guarantee and credit check, they're always going to tie it to you personally. Avoid it. When they tell you it can't be done, they're not trying to strong arm you. They're just dumb. They don't know. The people that you're talking to on the front line of these credit issuers, they don't even know no personal guarantee exists. So we see this all the time. They're telling you the information they believe to be accurate. And then in a lot of cases, when they see you get approved without even authorizing the credit check and guarantee, they're surprised. So just keep that in mind as well. And I'm getting a lot of thank yous. So thank you all. Please make sure you click the like button and subscribe. And look for our next training. We go live on YouTube every Tuesday at 1 o'clock Eastern. Thanks, everybody. Have a great day, and don't forget creditsuite.com/consult to schedule time to talk more, get your free business credit report, do the free fundability check, or you can give us a ring at 877-600-2487. Thanks, everybody. Have a great day.